Welcome into the Friday, July 14, 2023 Market Plus. Sue Martin is with us. Sue, I always have to cut you off because you give us a whole bunch of things to think about. I really should have just, the record scratch came right at the end when you were talking about feeders. You mentioned in your newsletter yesterday that we've seen the better rains in parts of Nebraska, Kansas, Oklahoma. I've talked to people in Oklahoma and Kansas. They're saying, yes, pastures are getting green. You're saying that is going to be a big bullish factor. What's the time frame and why?
Well, I think we're going to continue as we go in through the fall to see more rains hitting through that area also. And what's going to be interesting is with the price levels that we have and the price of feeders, and the auctions were strong this week, I think what we're going to see is the desire to hold back heifers for breeding purposes, and then they'll put the animals out on pastures this winter. And even wheat pastures might be good this year. So I think that will then tighten our supply of market-ready animals again. It'll tighten our supply of beef production. And that's kind of in the old days called the whiplash effect. So what happens is it creates the market to go screaming higher. And then all of a sudden, when those reports start showing these animals to be coming, the market just peaks and drops. But I think what you're going to have is new all-time highs again, and probably all the way through the first quarter of next year.
You see the hogs having that type of rally?
Well, I don't know about quite that type of rally, but I think it'll be good. The hog market normally, the hogs and pig report, other than maybe the pigs or the breeding intention, the pigs per litter, I would have to say that report was negative, but the market rallied, which told us, and then all of a sudden the product's getting better and everything. I think what happened is they were buying the market because they were going to do just like they did in the cattle market ahead of time. We didn't get to the bull market and they were already buying meat like no other and putting it in the coolers. And I think we're seeing that in pork as well, that they're preparing for this tight supply of animals next spring. So you're going to have contraction in beef, contraction in pork, poultry, maybe. So proteins are going to be on a downhill step. And you look throughout various, what was it been? In May, maybe, Smithfield said they were going to really sharply reduce their herd.
The number of sows.
Yes. And of course, my take is they wouldn't tell you that unless they'd already done it. But there's other entities, even in Iowa, pretty decent entities, that are reducing their herds. Some say, well, they're going to do new buildings and expand. Well, it still takes time to get there if that's the case. So I think and if we're doing that in Iowa, where else are we doing it? Lots of buildings up for sale throughout Iowa. I think we're looking at a contraction that's going to come, tighter supplies. And a lot of times the hog market will try to lift into the weekend past the 4th of July, and then it starts to turn south. I think we're still going to have a traditional setback into October, pork month. And then I think we start working our way, meandering back higher as we go into February of next year.
All right, let's get to some of these questions that came in via Twitter and Facebook. Thank you all. We're not going to quite get them all. We're going to hit a couple of really good ones. Let's start with Emily in Ohio. With the grim outlook for U.S. exports, why is local basis continuing to improve on old crop beans and corn? Well,
in the situation of beans, the crush is very, very profitable. And demand for ethanol is still very well, too. So, and then if you look at the beans on farm, the stocks on farm, it was down, 3%? And commercials were down, 17, maybe 18%? So supplies are tight. As far as corn, farmers are not happy about these corn prices, and so they're just kind of hanging on. And especially when we keep hearing talk of weather and these scattered rains, schizophrenic rains, if you're under the right cloud, you could get dumped on. Otherwise, you might get a tenth, a half, something like that. But amazingly, the crops look pretty good in a lot of areas. So now we just need to see how we perform.
We're showing this September. We topped above closed above $5 on Friday. Does that open up the door anything? Or I'm just going to summarize Susan in Illinois' question. Are we going to see $7 corn again this year?
No. I think that when you came out with all those added acres, I think that that blew us out of the water. Yes, we dropped the yield 4 bushels, and we should have. But we still have more to go. We have to see how pollination finishes, kernels per ear, how many rows around, the size of the ears. That's a still question mark. But I think that we could still take yields down and have a market that's inclined to be negative as we go into the fall. And so I guess I would have to say, and exports, other than with China, pricing in 1.3 million metric tons out of the Pacific Northwest, I'm just curious how much of that North Dakota crop is going to make its way over to the Pacific Northwest. They were talking about how rail and trucking and barge are all down as far as, the traveling or the expense of traveling. So, and it's because of less crop out there. But I think farmers have been reluctant sellers, and I think that's part of that push or pull.
Are they reluctant in old crop and new crop, or just one or the other?
I think they're reluctant in both.
In both, yeah. I think you're right. The new crop reluctance is crazy in a couple of instances. All right, this one Sue wanted to really hit. This is from Chad in Minnesota. I bought calls for 20% of my expected production this week through my merchandiser for corn and beans. I have a decent crop coming along in northern Minnesota. Should I be buying more?
And I was in shock when he said calls. I thought, that's the Texas hedge. And I thought, okay, so you're looking at a decent crop and you're buying calls with the thought process of prices going up. Have you already priced? That's the other thing. Otherwise, you're just adding bushels to yourself. To me, it would be floor your crop on this rally. We're getting a nice enthusiasm. We're already 30 cents off the low by Friday's close. So, and I think we'll be higher this next week, both beans and corn, but beans will struggle a little bit because they're unwinding spreads between corn and beans. But I think that I would use this rally. You might get up to 525, 535. I'd probably do a little pricing. I think that this market still, if I was to expect something real extreme to the downside, it would maybe be 460-ish, 470. And we weren't super far from those levels, just too far, too fast. The market's given us another reprieve, but it's not bottomed.
It's giving us one more chance. And I have one more question.
Okay.
This one is from Bradley in Nebraska. Carry is disappearing from the soybean market. Should producers consider making sales of November 24 and 25 soybeans?
And I was licking my lips when you told me that one. Remember, I'm the $30 bean girl.
What? You are? Since when?
So would I sell November beans of 24 and 25? Absolutely not. I wouldn't even do it with wooden nickels. And because one, I believe we're in a time similar to the 70s. And if you go 50 years before that, you were in the 20s, and those were the roaring 20s. And I think we aren't done yet with this inflationary push, the demand. You look around the world, supplies are tight. One thing I noticed on the world numbers, they always start off with the world, and then they say less China. What I noticed was 2021, 21, 22, 22, 23, those numbers were down nicely. And then 23, 24, of course, they're going to expect the best. But if you look at China, they need food. And they in my opinion, have not gotten themselves back to where they need to be. Why wouldn't they attack the whole world and make deals? Trading in yuan, these countries like South Africa, Brazil, they can't jump high enough to just accommodate the Chinese for what they're getting. But to keep in mind, did that totally because they were upset with the U.S.? No, they needed food, and they're spreading their wings and not keeping all their eggs in one basket, and it's smart. Because if we have a problem, and what happens if Brazil was to come back and have a problem? All of a sudden, we need Brazilian farmers to plant more beans because we haven't planted as many as we should have.
Right, yes, yeah.
And next year we'll plant more beans, but I think that you don't know what your input costs are going to be. We're at a time when we came out of the pandemic in the 20s. I went back and kept looking at those years, and the first year or two we were negative, and then we took off and we roared. And in the 70s, the grain robbery, which was Russia with the U.S. This time I think it's China, but I think they're working everybody in the world to make sure they have enough.
They're going to India.
Absolutely.
They're going to Brazil. They're going to
Yes.
Australia for any product anywhere. They're going through the Black Sea region.
Yes.
How many times? We didn't even mention that in this program. But the Putin this week said, I might not do that deal. We've heard that song and dance before, so it wasn't even worth mentioning. So, all right, you get just a couple of words to say. What's the biggest story in the next 3 months that you see that producers need to be paying attention to?
It's the weather between now and the end of August.
Fair enough.
I think it's going to be hot.
All right. We'll see how it all plays out. Thank you, Sue. Good to see you again.
Thank you.
Appreciate the time. Sue Martin, everybody. Next week, we are going to see how drones are delivering unusual packages that help producers. And we'll have the commodity market analysis of Elaine Cubbs. Thank you for joining us. Have a great week.